All right, traders, I want to take time to do some analysis on the Euro US dollar for the upcoming week of October 31st, the Halloween week, Monday. Okay, traders, this is a daily time frame we're looking at here. And we can see we had a TK cross here, which is your Tinkerson crossing your Kijinsen. This was a bullish crossover, so that's one bullish sign we have. We have this Chiku span here, which is this dotted pink line here. It's above price action, and above this Kijinsen. So that makes that pretty bullish sign also. Now we do like to see it get above this cloud because it's close to the cloud, and sometimes the cloud right here can act as a resistance here. The Chiku span will bounce off of it and come back down. So we really like to see it bust through here. But right now, that's a bullish sign here with the crossover. Your Chiku span being above price, and your Kijinsen is a bullish sign, and your price is above the Kumo, which is bullish. Now the only sign we don't have is a crossover of your Cinco span A and B. You have your Kumo twist, which looks like it's trying to develop. Okay, so that'll make this pretty much a bullish market if we have all that. But basically, what I'm looking at for the market to do now is a lot of times you have a big run like this, so then the market wants to consolidate or, trade in a range for a little while or pull back. Okay, so we're going to look for the market to pull back to this level here. This is going to be a 38.2 retracement level of your Fibonacci retracements. This right here will be your 50%, and this is a little more than a 61.8%. And I'll show you with the tool. Okay, I put the tool here, and then looking there, you could see, like I said, 38.2 retracement right here, and then a 50% right here, and this is a little more than your 61.8. But now this is a thick cloud right here, so if the market does range a little while and try to pull back and come down to here, this is going to be a strong support level. Okay, very strong support level. And this is another area that we're going to look at because this is your 38.2 retracement level. So we like the market to come back. That's a level that a lot of traders look at. So it's going to be used a lot. So it's going to be a level we're going to be looking at for to get back into the market or to get into a trade. Now the market could come right here and then go right back up come Monday or Tuesday. But normally we like to see, in order to get into a trade, we want to see it pull back. So we're looking for it to pull back to 38.2 or this 50, and at the most right here to this we'll call this the 61.8 level. Okay, and then in order for the market to go past that, it's going to have find a lot of support right here because this is a thick cloud. Okay, and then also there's some confluence that I have, because if you go to the keep these numbers up and you look on the 4-hour time frame with the Fibonacci retracement levels, the confluence that we're seeing is this 38.2% lines right up with this Kijinsen right here. Okay, and your Kijinsen always acts like is a trend line, or else it's it's a support and resistance line. It's like your trend line, it's your support and resistance area, and a lot of times if the market breaks that area, then you could look at change in direction. Okay, so we're going to look at the market. You got this big long wick candle here. We'll look for the market to come down and touch this level here, pretty close to this level, get down to this level here, and then we'll look to get into the market. This is the 4-hour time frame. Okay, so we're going to look for that. Everything on this 4-hour time frame is bullish. Okay, so you got your cloud is bullish, you're above your cloud with price, Chiku spans above everything, and you have your TK cross is bullish. So everything on the 4-hour time frame is bullish. Everything on the daily time frame is bullish except one thing. You need that crossover for your future. But I don't trade just based off of that. There's other decisions that need to be made. Okay, let's remove this. And I'll show you something else that occurred a while ago. Another time we had a pull here. We had the market break through a cloud almost similar, and the candle was just about the same size, because from here to here was 168 pips. Okay, let me show you what that is. 164, basically 166 pips. Okay, so what happened? It pulled through there, had the big run, 166 after it broke the cloud, and then it pulled back to that cloud, and then it took off. Okay, so if we go here and look at the same thing, when it broke through this cloud, it's about 170 pips, so pretty much close, the same size candle. So if the market remembers what it did back then, it'll pull back to here, pull back to one of these levels, and then we could get into the trade. Now we don't want to. I don't want to get into a trade here, anywhere up here. This is where a lot of people bail out because, they took this long run and they got their profit, and a lot of them are bailing out. Okay, so a lot of times novice get up here and take this, and that's where they lose their money, because what's going to happen is probably this will pull back here. Okay, so what we look at to pull back to this level, maybe this level or this level. So we're looking at levels to get into the market. We're looking at areas where the market's going to talk to us, and these are areas where it's going to talk to us. It's not telling us much right here. Only thing that it could be telling us is that it may pull back, okay? Because usually it does pull back after a big run like that. But it doesn't really tell us much here. But here it tells us, well, I have to do something. I have to either break this level or I have to go up again. I have to break this level or I have to go up again. I have to break this level or I have to go up again. So we're going to see what it tells us. When it hits this level, it's going to tell us if it's going to break this level or go up again. And the way it's going to tell us is by the action, the price action. We're going to look at the price action, the candles, and see what it's doing. So that'll be the way that we get into the market, okay? Um, Basically, that's pretty much everything. So I'll be looking at this come Monday and look to wait to see for it to pull back. Um, that's about it, traders. Hopefully, I'm helping somebody. If you need any help, just let me know. And other than that, have a great one. God bless.